So hi everyone, I'm here today with Dave Wilson, who's the Commercial Director at PayLink Solutions, and Rich Healey, who's the Product Development Director at PayLink Solutions. Thanks very much both for joining me today. It's great to have you here.
You're welcome. Good to speak to you too.
I suppose first off, I mean, we're sitting, at the start of 2021. And 2020 was quite a year. With the pandemic that's come out, and it'd be good to hear sort of how that sort of evolved from your business point of view, in terms of adoption of the product and what you've heard from clients.
Yeah, of course. I guess the biggest thing we've found is that lenders are gearing up for to deal with a mass amount of customers at any one time. So we're very much in the mind of the lenders' risk management system that says, actually, if I was to get X amount of customers that came to me all at one time, how do I cope with that? How do I deal with that? And how do I ensure that each customer is getting a best practice, a correct result? And the way they do that is by using our application in a digital manner. So this gives them a lot of flexibility in the sense of they can deploy the application across a self-serve journey. They can use this with their actual agents behind the phone as well. And it's all about the fact that you can deal with more customers at the same time if and when that kind of moment comes around. Yeah,
I mean, there's a big sort of transfer across onto digital, wasn't there? Which I think, folks like yourselves are sort of like really sort of picked up, quite a bit of interest, I suppose, is sort of like we sort of like, transform that digital journey. It's always been there, but it feels like that's sort of gone on to, gone on and on as this has gone on. Was that kind of what you kind of felt?
Yeah, I agree. So we at the back end of 2019. We found that if you gave the customers choice between a digital and a phone route, there's about a 60-65% split of people that would still do digital. So it's always been the greater route. When we look at the back of 2020, that's risen in some of our cases with the lenders we deal with up to about 75%. So even in without kind of changing strategically how they deal with their customers have generally started to gear more towards doing something digital, and a 15% rise in some cases over a year is quite abundant as to how important it is. And I think this kind of comes into the fact that the customers now have a purpose to complete this, because ultimately they want to try and get the lender as much information as they can so they can be dealt with in the correct way as well.
Yeah, and I know you spend a lot of time, in the I&E space, and you sort of help people complete that sort of automated fashion. I mean, have you seen greater uptake as a result of financial difficulty? I mean, is that part of what's been driving it, or how do you feel about that?
Yeah, and so we've seen a more substantial amount of customers that have ultimately, once they started the journey, complete it. So again, if we talk about back end of 2019, our kind of in-app conversion was around about 70-75%. Again, in some cases we reported 90% conversion rate on people that start the journey to finish it. And I think this is all down to the fact that there's now a greater purpose for the customer to complete on this information more ever than before, because of the kind of circumstances that are surrounding the UK market at the minute. And so we've made UI changes, design changes to adapt that for the customer's needs to make it feel more like a journey that they're able to complete. But ultimately what we found is that customer intent is higher than it ever has been before, in terms of I know I need to do something, so I'm going to get my email, I'm going to complete the journey, and I'm going to send this information back in again.
I think there's a wider point as well. So you're quite right to say that it's that the customer has a need to kind of complete the journey. But I think what we've really found is there's been a huge pivot in the way that companies have had to operate in like kind of COVID last year. So there's been a whole raft of changes. The vast majority of people are now working from home. There's been a raft of sort of FCA regulation changes with all the kind of payment holidays coming in, which to some degree has kind of pushed some of the kind of problems that we will face further down the line. And when sort of COVID first came in, there was huge pressure on banks and their operations departments to manage all those call volumes, just putting in place these payment holidays. So I think what that's really led to is because banks struggled so much with that, and they have a half an eye on what is going to come further down the line, it's really forced them to say, actually, we need more agility to be able to deal with those volumes. So rather than historically only offering an agent over the phone to have that kind of customer interaction, actually we think that there is a desire to have more kind of digital tools and give people a greater degree of choice. So if you want to still speak with an agent, of course we'll honor that, but actually there will be a new cohort of people that are perfectly happy just completing journeys via a self-service method.
I mean, and one of the things sort of I had a few discussions on is what's the balance between sort of the digital journey and the fully digital journey and the human interaction. And we're sort of in this world of sort of like changing from what was, let's say it was a more manual process with digital options to now almost like being 100% automated. Let's take an extreme. And where do you think we draw the balance? I mean, are we going to go too far, or I mean, is there a sweet spot that we need to try and reach?
Yeah, I guess where we play right now is we allow the customer to create their affordability profile, and we give them the tools to be able to do that. But ultimately, what we do is we're helping a customer package their data and their situation into financial tool, digital tool. They can then refer back off to the lender. What we haven't done is take that whole process and automate it. So the customer right there and then is set up with a payment plan for X amount of months that then is kind of automatically re-honored. Now, we know further down the line that's probably where the future holds that. But right now, what we're doing is we're giving the customer the tools to build this financial capability themselves. But ultimately, we're still allowing the lender to make the decisions on actually what's happening. And we haven't completely removed that interaction with the lenders. What we do is we allow the lenders to have as much data up front as possible. So when you have those conversations, suddenly you're not having hour-and-a-half conversations. You're having shorter, sharper conversation because the data's there. We've already been gathered, and the customer's also got a good idea on what that outcome looks like because they've been the one that have driven this process through as well.
And and we were chatting, and Dave, we were chatting the other day a little bit about customer choice and the role of customer choice. And I mean, what's the role of customer choice in automated journeys? Because that was quite an interesting idea. I think we were chatting about.
Yeah, so I think we recognise that everybody's different. Some people will be happy to have the traditional telephone conversation. Some are happy to go down a self-service journey, but actually there's some people that would like a bit of a hybrid approach. So it may be, okay, I'll give self-service a try, but if there's something that I don't understand, can I go back to an agent or use a chatbot or some kind of digital tools that will help me to kind of get over the little hurdle, the little kind of bump in the road that I perhaps don't understand, which is why rather than mandating, this is the only single way that we can actually access information. I think by giving people choice, it helps your take-up rates essentially, and ultimately it helps the lender to improve the customer journey that is so important for all lenders these days.
Yeah, I think exactly right, Dave. There, so we've seen a lot of instances where what our application allows you to do, if you get 3 steps through the 5, you can, like say, if you get that bump or that hurdle that you need to get over, you can actually pass over what you've done so far for the lender to be able to complete on that. So actually, if I'm a customer and suddenly I've got some bits that I want to chat through with someone, I can share what I've done so far with the lender, who I can then chat with. We speak. They can actually pass it back to me as well if they want to do that. So you can really bespoke the journey based on the individual requirements of the customer, which is ultimately, as data, one of the most important things you can do right now is to give them the flexibility to be able to do this.
So it's about getting the digital process to help people rather than to do it for them. You see what I mean?
Yeah, absolutely.
Yeah, and one of the tools that we've been talking quite a lot about in the industry has been open banking. And I know you guys have got experience working with that as well. And I think certainly on the front end, in terms of some of the decisioning and adjudication, there's been quite a good uptake on open banking, but it's always sort of struggled a little bit in collections, just in terms of what the value exchange is, I suppose, from a customer point of view. I mean, and I know you've seen some great sort of some uptake rates. I mean, it'd be good to just explore a little bit and find out a little bit around why you think that is, and what are some of the secrets of success. I mean, what's the use case that's really sort of going to drive adoption, do you think?
Absolutely. So we, like anyone else, we worked with open banking, provided we worked with Credit Kudos as our ISP, and the original thought process was if a customer connects to their account, we're going to have a fantastic budget that's built off the back of that, and we're going to make this journey a whole lot shorter and sharper for that customer. The way we position this tool now is that this is an aid for that customer, and we give the customer choice around: do you want to automate this budget creation process, or do you want to manually go through that process itself? Now, where we started to use that kind of terminology and the designs reflect that customer choice option, if you are with a lender that you then have your current account with, we're seeing around about a 60% uptake of open banking adoption rate with an end user. And I think that's because the customer's comfortable that if I'm doing my affordability with lender A and my bank's with lender A, I'm going to make the connection between the two. And I'm going to pull that information back and start to pre-populate the budget. It's going to save me time. It's going to help me with accuracy. It means I don't have to think of all the pences. The application is going to do the work for me in that sense. We're still seeing, and what we're trying to do now is try and engage with customers that and give them comfort that if I'm actually doing the open banking pool with lender A, but my current account is with lender B, we still see that there's a resilience to make that connection between the two. And in the customer's mind, what they're thinking is actually, I don't know if I want to kind of cross-contaminate my data across lenders. So in that scenario, we see about a 40% uptake. So we see about a 20% drop-off based on which lender or which current account you have. When customers are going through this process.
One of the things that kind of strikes me is quite interesting that even if you got the current account with them, then you still go through the open banking process just from a ease of use almost in some ways.
Absolutely, and I guess that what we find is that there still isn't a silver bullet to create a perfect budget, but especially within collections, that we use this as a tool for the customer to help to build that data set up. We use this as a tool for them to save time, improve the accuracy of the information they're pulling back. What we still find in there is you couldn't just take that open banking data, give that to the lender and say, make a repayment solution, because actually there's so many more variables that you need to do. So we are very much positioned this for the customers. Hey, look, save time, improve the accuracy, help us get a kind of a better solution for you using this information. But ultimately, it isn't still a silver bullet to create a perfect budget just because you've used that open banking technology.
Right. And what's the view in terms of like where does open banking go? Where does it go? What do you think the future is going to be? I mean, so we've got some initial adoption and where it's going to go. It's sort of helping with the automation, but is there more we can do? Are there more data sources we can get? Do you think?
Yeah, I think if you look back at the purpose behind open banking, the intention was to democratize banking services by making them more open. So the body that was actually set up by the CMA, the Open Banking Implementation Entity, they've actually recorded that the number of people adopting open banking has more than doubled since January 2020, despite all the kind of issues that COVID-19 has actually caused. So I think that's for a variety of reasons, that people are actually adopting open banking. Some people are using it to have better access to credit. Some people are looking at open banking to help when they're applying for mortgages. Some people use open banking as a tool to give you greater visibility across all of your banking products, almost kind of aggregating the accounts that you have with numerous banks. And of course, as we've been speaking about here, it's had a tremendous application and use in the data management world. So I think as a financial services fintech, what we've tried to do is to take advantage of the tools and the technology that's available to make a process easier, to make it more transparent, and to ultimately improve the kind of customer journey and to help adoption rates actually increase. So I think having over 2 million people in the UK using open banking now is a good start. It was 1 million last year, now it's 2 million. So I think
that's doubled.
Well, double is always good, but I think because people are becoming more used to the concept of open banking, I think there will be additional kind of products and services that other fintechs and other organisations are kind of bringing to market, because the end user benefits are so vast. I think from a debt management perspective, what is really helpful is that it allows you to have a greater level of granular detail, not just to understand what is a consumer's circumstances today, but actually what's going to be happening over the sort of next 3 to 6 months. So if I give you a real example, the FCA is mandating that we have to perform affordability assessments at the end of every mortgage payment holiday. So all that activity is going to be pushed on to lenders perhaps in the next kind of couple of months, which has kind of a challenge associated with it. But if people's income levels have actually reduced, and you have made arrangements with a consumer to set up repayment plans or partial repayment plans, once you've actually made that arrangement, can open banking provide you with more granular ongoing data to ensure that that arrangement is sustainable? Does it allow you to highlight any potential issues such as gambling, money going into gambling? Have we seen reductions in income because income has been quite spiky? So I think open banking really is not just a tool to allow you to access credit or to give you a once and done assessment of your affordability. I think it has far more wide ranging applications that perhaps haven't been fully explored by people yet.
And I suppose one of the sticking points of that has always been around, I suppose, the 90-day permission. So you have to give permission every 90 days. Yep. I mean, I don't think that's going to go away. I mean, that's kind of, those are kind of the rules. I'm not arguing that it's actually going to change, but what do we do to try and make it more sticky, so people are more comfortable with using open banking? Because you can get to all of those other things in terms of pre-collections, pre-arrears, some of those kind of things. What are your thoughts on that in terms of how, I mean, is it about stickiness? How do you make the applications and the interaction more sticky?
I guess what you need to do is you need to give the customer a reason to keep making that connection between the two. So you need to show value by the fact that using this application they've got to a certain solution. It's about giving the customer a reason to do that. Now there are lots of other things you can do as part of this, as Dave touched on. There's more than just the application right now. You can use with open banking. So you can look at, for example, how can you help customer save money within another product. So actually, if you can understand that customer's data set, you can set them up with a plan that they can then regenerate through. Actually, what else can you offer that customer as part of this journey? Can you offer them where you can oversee their overspending in certain areas? Can you offer them budgeting advice? Can you direct them towards places where they can get better deals? Absolutely. And then as a customer now, I have got more than just my original solution out of it. I've actually may have saved money, had an income maximization. So actually, I've got value out of that. So as a customer, I'm going to keep making that reconnection and keep re-engaging, and that's going to keep the kind of data coming through because it's of a purpose for me. It's of a value for me to be able to do that, and it's those extra products which is what takes it from doing a one-time collections process through to actually having something that's a substantial application you can use for financial management.
So there's a story that came out recently, and it's about online adoption, and I suppose, and it was the figure was actually quite surprising. Actually, it was like 50 or 60% of people sort of still have concerns with online banking. I think it was, and obviously we spend a lot of time talking about digital adoption and digital products and those kind of things. But there are these sort of people who are adopters and people who are used to it and they're in the habit of using online. And then and particularly for some of the banks, I mean they have to service everyone, right? So they've got people who aren't necessarily savvy or as comfortable with online servicing. I mean, what's your view in terms of like how do we do that? I mean, is it just a gradual migration, or are the tools to try and include people in other ways? Or because I think that's a problem for some sectors and some parts of the industry as well.
Yeah, it is, and it's also very difficult in a customer journey to explain what's about to happen within a couple of sentences. So what you don't want to do is a balance between overburdening the customer with information that's going to they're not going to digest, or they're going to turn away or read off, between actually an instant understanding of what you're about to do by reading the first sentence. And I think it's that piece where you've got to try and hit a sweet spot for the customer. And the best way of doing that is understanding who that customer is, what that customer wants to get out of the journey, and create bespoke and different UIs based on the customer insight that's dealing with you in the first place. So each customer will do something slightly different, and it's about knowing who those cohorts of customers are, understanding the kind of way they want to interact with an application, and then the UI adapting based on that, which is you start to get really clever in the way that the actual application works with that end customer.
It does feel like, we've all got much more into, I suppose, the habit, or just tried it to a certain extent. I don't know what you're like.
Absolutely, yeah.
Some of these things I didn't try beforehand,
Yeah.
and sort of like the lockdowns have really sort of like forced me to try different things. Like, I don't know, online supermarket shopping. I mean, like, that's fantastic, right? I mean, like, you
cosmic
get
yoga with the kids.
Yeah, exactly. Yeah. YouTube exercise videos. I mean, all of these things we've all tried during lockdown, but and now we've adopted some of them, right? I mean, do you think that's going to happen as well, or?
Yeah, I mean, we certainly don't see the likelihood of digital now dropping off. The way that a lot of the lenders are kind of that we're talking to is they see this as a way that they can get a regular touch point with that customer in, where, let's say, for example, it feels like going to the dentist once a year, where actually I need to get an update on your financial circumstances. And as an end customer, I think, well, I need to do something annually. How am I going to do that? And we see that recycling of using the application in that method. And so from that perspective, we don't see any kind of lesser uptake of the application being used. If anything, I think we're going to find the repeat service of not only have we done a one-time hit to create my affordability portfolio, but it's the repeat. Okay, 6 months have gone on the plan. How does your affordability look now? Go in, check in, go through that process. And I see that part growing exponentially as well over the next few years.
And one of the challenges has been, customers have to do income and expenditures multiple times, right? So you have to do it with multiple issuers, and data portability was always the holy grail we're always trying to get to. And it'd be good, I mean, Dave, maybe just get your view around sort of how you feel there's a commercial question there as well, I suppose, to a certain extent. But I mean, how do you feel around sort of industry sharing around some of the data, I suppose, to a certain extent?
Ultimately, the data belongs to the customer, so they have to give permission to allow it to be passed between different parties. So when we look at the demographics of open banking, we first saw people in their 20s being sort of the early adopters. Now it's up to sort of early 30s. And one of the points you were just making in terms of the pandemic has made us adopt new tools and new technologies. I think a lot of that would have actually come anyway, but we've almost been forced to adopt it 3 or 4 years ahead of the curve. So very much they are here to stay. So I think open banking is only going to grow.
I'm also interested in your perspective on operations and call centers. I know there's you obviously spend time working with them as well.
Yeah.
And this move towards digital, what do you think the impact's going to be on the call center industry, and sort of is that going to put, they've already come down from what were really largely manual people-based organizations over the longest time. Do you think it's going to fundamentally change what we do over the longer term, with impacts on that too?
I think there's a couple of kind of ways of answering that. So have call centers changed? I think arguably yes, because there are, ultimately a call center is made up of a number of different agents, and agents that were traditionally used to working in one particular office location. There are a lot of people that have never had any exposure to or an ability to work from home that perhaps will actually enjoy that. So I think there will be a hybrid between actually having people in a traditional office, but also having some people kind of working from home as well, which could potentially help with the attraction, the retention issue that a lot of call centers typically tend to have. I think that's kind of one point. The next point I'd really make is that if you look at all of the routes that a customer would have to speak with the company, be it a bank, be it a retailer, traditionally there's been no content memory between these different channels. So you could have a conversation with one person over the phone, maybe have another conversation with a chatbot, or another conversation via email, and it wasn't always the case that information was sort of seamlessly transferred between the kind of different sources. So there wasn't that kind of content memory. I think what will be important kind of moving forward for call centers is to improve the kind of customer experience and raise the quality up a level, so that there is this expectation that, if I have started to speak to an agent, and then I'm having to kind of give my permission to allow open banking, I can go in and I can do some steps myself, and then actually if I hit a bump and there's a question I don't fully understand, I can go back to the agent. So there's that. I think there'll be a more seamless pass through between self-service and digital. I think that's going to be one of the kind of main sort of changes we're going to see over the next couple of years.
And it feels to me like almost like the very nature, particularly of collections departments, is almost like it's been changing, or certainly it's been changing over the last 10 years, where you use tools like like the I&E tools, and it becomes really around like how do you then work with the customer to help them understand it, help them understand what their options are. And it's quite a different conversation than it used to be even like 10 years ago, even let alone 20 years ago. And the whole nature of that seems to be changing. The nature of collections call centers in terms of like the human interaction seems to be changing.
Yeah, and there's definitely more of an education element now as part of this journey. So actually, if I'm a customer, I understand how I've built up my proposals and how my plans work. We see better sticky rates on those plans as well, because now as a customer, suddenly I kind of understand my situation. Maybe where before I haven't physically written everything down myself and work through that. We're definitely finding that if a customer understands and we try to educate them on their financial situation, we see a better uptake, and we actually see a better throughput of plans as well. And people stick to their plans for longer because there's that knowledge of how I've formulated my plan. Well, this is exactly how my plan's built up.
We're obviously all working remotely now. I mean, how are you finding that from a client point of view, from from a business point of view in terms of interacting with each other? I mean, is that is it a good thing? Is it a bad thing? What are the things that are working well and not?
So I guess firstly we were really worried because we love going out and seeing people. We'd have weekly, at least weekly meetings where we'd physically go and sit in the lender's office and we'd chat through. So we were quite worried about the fact that actually, am I going to be able to keep this closest of the team? We've actually found the complete opposite. We speak to our customers more than we did do previously. We have kind of shorter, sharper meetings rather than kind of more elongated meetings. But actually, we've onboarded more customers than we ever have before over the last 12 months. We completed on more projects than we ever have done before over the last year as well. And generally, the relationships have actually strengthened based on that. And there's a feeling of actually we're all in the same boat here as well, in the sense that we know what you're going through because we've got kids screaming in the background and we've got the postman coming every 5 minutes. And so there is a kind of sense of closeness, I think, that kind of gels teams together that we've definitely found over the last 12 months.
Yeah, I'd completely echo that. I think at first there was the concern that people would have, Zoom fatigue because you were having more meetings in a day than you've ever had. But I think because meetings have tended to be a little bit more informal, as Richard mentions, we're all in this kind of same boat. I think there's an appreciation that we were able to kind of pivot from all being office based to providing the same level of service, and we were able to do it quickly, partly because of being a fintech, you have to have all kind of the tools available to allow you to work remotely. So it probably wasn't as hard a transition for us as it was for others, but I echo Rich's point. I think relationships have actually been strengthened. I think you're all seeing each other's homes, which you never kind of did before. So I think moving forward, clearly we'd still like to physically go and see clients and sit in their offices, but I think there'll be a combination of those meetings. But we'll continue to have these kind of virtuals.
I mean, certainly these sort of like 10-minute sort of almost like video shorts where you sort of you end up getting on the video call with someone, chatting with someone, and sort of getting it done. I mean, I think that those have definitely been a boon. I think it certainly feels like in terms of building relationships closer. It's just in the long term, we probably still need to have a little bit of face-to-face time. I would think just to build relationship and sort of like shake someone's hand or look them in the eye. I haven't shaken someone's hand for a year. That's
because you've got to sanitize afterwards.
I hear you on the postman. I mean, I think certainly before Christmas when we were all getting deliveries at home and it was like everyone's doorbells were going. It was occupational hazard.
I think the other thing as well it does is I find it takes things away from email as well. So I find email a really difficult place to there's a lot of ambiguity in email, a lot of sense of tone that seems to have reduced, and people are more likely now to pick up pick up and I'll do a quick Teams dial than to write an email, which is perfect because then you actually get to speak somewhere where before, even if you say in the same office, there might have been an email. And I think that definitely helps if you actually be able to talk to someone. So weirdly, working remotely, we're probably talking more than we ever have done before.
Yeah, the one thing I think that's been hard to replicate has been almost like the surprise conversations where you're running past someone in the hallway or those kind of things. And so I think we've still got to try and work that out a little bit. So, okay, well, thanks very much. I mean, good to just to finish off. We could just to get a bit of your perspectives on what you think the future holds for this year. I mean, we've gone into the start of this year, and obviously, it's been, I think, for me at least anyway, it's been a tough couple of weeks. Just because we've gone back into lockdown and sort of just like coming back off the holidays and those kind of things. But it's like we're now picking up speed, and it'd be good to hear about what you think is going to happen this year, and what you think the future holds really.
Shall I start on this one? So I think I mentioned beforehand that because of the unprecedented situation we've found ourselves in, the government has had to step in ways that they would never have considered previously. Furloughs being extended, mortgage payment holidays being in for 3 months, and then sort of being extended. So I think there is a greater appreciation that there will be more people with greater levels of debt than they perhaps would have expected to have had before. So I think being in debt and having debts perhaps will have less of a stigma than it's previously had before. I think what it's also highlighted is that all the lenders we speak to are really concerned about not just operational resilience, but really being there for their customers in their hour of need. So the ability to give people choice in terms of how they want to interact with a lender, I think, is a big tick and has been welcomed. I think the fact that a number of people will be having to kind of put arrangements in place that have never had to do that before. I think lenders are really open to their consumers having more debt advice. So actually, rather than just saying you owe me some money, let's put an arrangement in place where you're going to pay X pounds or X percent on a monthly basis. That's fine, but that's quite transactional. I think people are more understanding, more emotive, and saying actually, can we help you? Can we provide some kind of debt counselling, debt advice, so that it's going to the next level and saying actually, it looks as though you may be overpaying on your utility bills. Are there comparison sites you could actually take advantage of to actually start to give you additional kind of income levels? So it's not just looking at you owe me money, can you pay me? It's actually how can we help our end consumer? And I think that sort of that empathy and that sort of emotional intelligence, if that's the correct term, I think that's been one of the kind of positives that have kind of come out of this experience.
We understand that people in the situation maybe and understand people better, maybe, to be able to help them more.
And I think going back onto the kind of stigma point, there will be people that are in debt that never expected to be in debt, and perhaps would feel a little uncomfortable having this kind of face-to-face kind of conversation with an advisor about that. So actually being able to utilize the sort of self-service tools, I think that will undoubtedly help and appeal to a certain demographic.
Yeah.
Brilliant.
Rich?
Give you a context about kind of the state of what we see now. We had across our applications, I mean, we've had hundreds of thousands of people use our apps. We had 20 people on Christmas Day use our application and complete an affordability process on Christmas Day this year. And I think that really gives context as to Dave saying there exactly what's happening right now. And people are worried and people want to kind of get a resolution in place. The biggest thing I think we'll do from a technology perspective and offering perspective is at the minute collections is very reactive. So something happens, you miss a payment, and therefore you then need to use an application or you need to speak to someone in order to make that resolution. Where I think we want to try and help the industry get to is more of a kind of proactive arrears collection, where actually before the customer has missed that payment, we're able to step in and help them. So we can use either via open banking technology, by customer behavior, previous data. We know that a customer is likely to miss a payment maybe before they do in some circumstances, and we can do something proactively about that before we hit that the kind of collections point. I think that's the biggest, one of the biggest switches that our technology is going to help our lenders do. We're working with lenders every day to see how that looks and feels like, but that's the kind of switch that we want to try and make to avoid this very reactive collections process that we currently have.
And that's why I think some of the psychology stuff we talked about is so interesting, because it's almost like as much as it's the functionality, it's how do you persuade people to interact with you, right? Which is almost like a psychological question rather than a pure process question.
Yeah, I agree. Absolutely. And like I say, we've seen a lot. We've seen a lot more. We've seen a rise in people that do IDs on, for example, Christmas Day, late in the evenings, on the weekends. That's risen over the past 12 months, and as well as the general adoption of people doing that. And you're exactly right. It's to do with that psychology now of actually, I now need to do something. Whereas before, my vision of am I in trouble financially may be slightly different to what it is now. And it's getting onto it's understanding what the customer actually thinks about. Because we have many customers who have two grand's worth of debt that this is the end of the world to them. They really need to get this sorted on that day. Where other customers with larger sets of debts across larger sets of lenders, where previously for them there still wasn't a problem because the two people think very differently about the situation. We're now definitely seeing more of a propensity where a customer knows that they need to do something, and therefore that their kind of intent has definitely grown.
Sort of like the guardrails have changed a little bit in terms of people's perception.
Absolutely.
Well, Dave and Rich, thanks very much for joining me. I really appreciate it. It's been great and fascinating to hear some of the stories in terms of where you are. Some of the stuff you've done has been great, and it's really interesting conversation. So thanks very much, and we'll speak again soon.
You're welcome. Thanks for your time, Chris.
Thank you.
Thanks. Bye.